Hey guys, it's Sia once again, and in this video session I just want to show you an example of a live example of a 2618 trade setup which has formed on the dollar yen in the 15-minute time frame. But basically I'll give a quick rundown in terms of a top-down analysis, then showcase to you that at market 2618 trading opportunity. This one might be a winner, might not be one, but basically in my trading plan I don't trade 2618 trade setups, but I do take them into consideration when I'm doing my live analysis for my live account. So yeah, without further ado, let's go to the charts. Okay, so basically here what we have, okay, that's the euro there. Okay, so starting on the daily chart, market, the yen, also most of the currency pairs, the dollar base pairs, dollar majors, are in consolidation. On the dollar yen itself, again, when you're looking at the highest high and the lowest low, we are in consolidation. We're not creating new structure highs. So basically, when there's because in truth the market 70 to 80% of the time currency markets are in consolidation. So in essence, there are trading opportunities in consolidation, and there are trading opportunities in the markets in trend. So basically this trading strategy, the 2618, works best in a range bound market or where there is consolidation, for example right here. Now without further ado, let's go. If you go down to the 4 hour, again you can see the market pretty much is in junk, to say the least, but there are trading opportunities that one could take advantage of if you know what you're doing and you are following your plan, which you have back tested and seeing that it has been profitable for an extended period of time. Okay, again right here on the 4 hour, nothing much on the 4 hour to be excited of. Moving down to the hour charts as well, nothing too significant. But on the hour chart, what we have a harmonic move. So in the swing trading side of my portfolio, what I'm looking for is for price action. Okay, so in essence you can see what I'm doing right now. What we have is an AB equals CD harmonic move. Now you can trade ABCD on themselves, but personally I don't trade them that way, because you could literally blow your account. So I look for second element is structure. So basically here you have an ABCD pattern which comes within somewhat of a structure level. Okay, so you have a price action respecting here. So we do put in support, and again where the market is most likely to go. So in essence, this is where the near-term resistance is in the market, right here. So you have a range. Next, if you take your the Fibonacci from swing high to swing low, we have an important Fibonacci level, the 618, known as the golden mean. So you know I'm marking that zone. That zone is on my radar. Next, so we have an ABCD pattern ABCD harmonic move on ABCD pattern. We have a 618 Fibonacci expansion. Then if we were to take our Fibonacci extension, we just come a tidbit above the 618 level, so in essence that's not that much significant. But then the 618, let me just check, 618 I think comes into structure or into our golden mean zone. Oops. Do we come to it? Not quite. Okay, the 618 is inside our zone that we need to lock into. So basically, longer term, I'm watching in terms of what price action it does at the 120.12 zone, 120.12, 119.87. So in essence, I have identified where the market is likely to go. I've identified where the market is. First, identify where the market is. So we are in consolidation. Second, predict where in terms the market is most likely to go. We most likely to test a previous structure or structure zone that we have created, or not created, but what the market has shown us in essence. We had a Fibonacci 618, the golden mean. We have a structure up there as well. We have AB equals CD confluence, so it's a zone to watch for. So basically I'll be looking in terms of what price action does at that zone, that 120-119 zone. I'll be looking at a couple of things when the market gets there, if it does get there. So if the market gets there, then what I'm looking to do, or what I'm looking for, basically are double tops. I'll be looking at rejection of resistance. I'll be paying particular attention in terms of wicks and where the market is closing. So in order to give me an understanding or a good risk to reward in terms of risk to reward favor. So I'm not paying attention much to risk to reward on this one. Now going into the 15, let's see if it's still valid. So the intraday time frame, as it's noted or it's known for. So we have a double top, again double top, highest high, highest close comes into, so the highest close is at 119.74, highest high is at 119.83. so we've had that zone that the price action has been testing, which in essence creates our double top. Next will be how we would trade this particular 2618. So if I were to take my fib expansion from my swing high to swing low, I can see that currently where the market is so this in essence here is our zone, our 618 zone, right? So this is where you would actually, if the 2618 is in your trading plan, you would look to execute, or you would actually right now be at market. If you had missed it, you would be short, okay, on this particular trade setup. Going back to the rules of engagement, we have double top, market has proved and tested our double top. We have price action creating an outside return, testing the 618, and most likely we might see a comeback. Okay, how now? Next step would be determining our targets. How we do that? Basically, again, looking at structure. There's a number of ways you could look to actually place stops first you could use what's known as an ATR stops. You could use again a 10 pip stop. You could use a structure based stop. You could use a 113 Fibonacci stop level. So basically minimum is you're looking at stops coming into you're looking at stops coming just above structure right there. So you're looking at a risk of something like this. This would look like in terms of our risk. Reward now, since we will take a conservative targets approach, since we are in essence short term, we are in an uptrend short term, but the market is proving otherwise with that double top. So looking at targets, near term structure. So we're looking at targets right here. Target ones. Could also look to have secondary targets coming into slightly under that structure level. So we're looking at just at this zone for target twos, just at that zone for target ones, target twos, just to be safe. So not bad in terms of risk to reward on this 2618, but hey, this is subject to change at the time of me actually going to posting this to you guys. So yeah, anything can happen. You could see by the time I post this up, because in my time where I am in South Africa, it's pretty late. So the time I wake up and I post this to you guys, trade might be invalid, trade might be a winner. So hey, I don't know, but what you should get out of this, is the lesson behind it in terms of sticking to your rules, trading your plan, and yeah, sticking through, because in essence what trading is, it's all about psychology. And yeah, it gets a point where trading really gets boring, and yeah, so you will know that once your trading gets to that stage, that's where in essence the money starts to flow. So yeah, without further ado, plan your trade and trade your plan. See you next time, guys.